Google has just announced its own custom in-house chips, and the proposition here comes down to compute power, costs, and scarcity, a lot of what we were talking about. Google, though, is on both sides of this Gen AI race. The company itself is developing models and applications, but as a cloud provider, it also needs to provide compute power to its cloud customers. So AI resources, for which high-end chips are critical, has to be rationed in some way or another, or it needs to be brought in-house to reduce reliance on those outside vendors like an NVIDIA. The move also lets Google compete with chip makers like AMD and Intel. As we saw Intel's new Gaudi 3 chips, the chip wars, they are indeed heating up, and now Google can also position itself as a potential chip provider for cloud customers to rely on for AI workloads. So that is what Google and its mega-cap rivals are doing. Axion is Google's latest expansion into custom chips, which the company says is capable of a range of tasks from powering Google's search engine to AI-related work. The success of Google's custom chips, so far, it has been mixed. Gen AI darlings like Character.ai and Anthropic, they have used Google TPUs, but it isn't the full hardware-software stack that NVIDIA, as we were just talking about, has built, and which has helped it retain its dominance. And that is
ecosystem,
really key.
That ecosystem that they have.
Exactly. And you've got Google, right? It already has this cloud infrastructure. It's the #3 player in terms of hyperscalers. You've got AWS, you've got Microsoft's Azure, and then you've got Google. This is a real opportunity here, actually, for Google to gain some ground if they have the right tools. And it's all, I'm told, about openness and choice. So any enterprise that wants to develop their new Gen AI offerings, they want to go to the cloud provider that has the Anthropic, the ChatGPT, the many, many other models.
And so it's a coming battle between these three giants, really.
Yeah, and that's why you see it at all of these cloud events, right? You see it at AWS, and Google Cloud Next is going on right now. They're all touting all these tools, and all of their partners and all the customers sort of that are using their cloud infrastructure. So it feels like kind of a new battle. First it was over infrastructure, then it was over apps, and now it's over Gen AI tools.
Wedbush Securities senior equity analyst Dan Ives. Good to have you here on set.
Great to be here.
The fact that Google moved higher on this news, Alphabet moved higher on this news, I suspect you're not surprised since this is a top pick for you. But I guess break down what you thought was the most notable in terms of disclosures, because this wasn't the only one that we got in terms of AI today.
I think this is a flex the muscles. This is really them going on the offensive instead of the defensive. From an AI stack perspective, I think this could gain share in hyperscale. And when we look at what we've seen with Microsoft, and I think eventually we'll see with Amazon as well, we're talking about $1 trillion market opportunity over the next decade. So when you look at what Kurian and Google are doing, this was exactly what they need to go after. But also it's developers. It's music to the ears of developers. Look, we believe some of the parts, $30 to $40 per share incremental for the AI opportunity.
In terms of the custom chip piece of news that we got today specifically, is Alphabet behind the ball, at least in terms of disclosing it, when you've seen similar disclosures from some of these other companies like Microsoft, like Meta, like others?
Yeah, clearly late to the game, but not too late. And I think this was something many were really yelling for them to do. They did it, and now it's really about can they gain more and more share within their install base? Because it was a missing piece in the puzzle. And I think if you look at everything they did in terms of from some of the disclosures, from the chip side, to I think some of the announcements that they're making, even on a customer perspective, it shows this is not a company with back against the wall. It's a company on the offensive. And I believe, and we believe Wedbush is probably on large cap, continues to be extremely undervalued relative to the opportunity.
Okay, so how to think about that in terms of some of these mega cap names that I do know you cover, because you do also have Meta expected to unveil 2 small versions of its upcoming Llama 3 large language model capabilities this week as well. And then there's Apple. It's kind of like the dark horse out there. I think there's expectation that at its developers conference we could get some more detail on AI, but we haven't really gotten much from that company.
Look, right now, obviously, top of the mountain, godfather of AI, Jensen, NVIDIA. But then if you look from a software perspective, it's Nadella, what they're doing, Redmond. I think get out the popcorn type of earnings that we're going to see from them because of Copilot, because of what we're seeing from an AI perspective, monetization. We think $35 to $40 incremental monetization for every $100 spent on Azure. And then I think when you look across large cap, I mean, in our opinion, this is really going to be a very, very strong tech earnings season for the likes of Amazon, for what we're seeing with Google. When it comes to Apple, well, clearly iPhone weak in terms of China, but that's not the story. The story here, $270 million is a pent-up upgrade opportunity over the next year into iPhone 16. And when Cupertino and Cook unveil at WWDC the AI strategy, I believe that's going to be a watershed moment, not just for App Store, but for iPhone 16.
Is that priced? So you don't think that's priced into the stock? I guess just looking at Apple, looking at the fact that top line has been so weak over the past year or so, do you buy it here ahead of earnings? And I ask that knowing you just came back from Asia.
Yeah, I mean, look, I view it that the bad news at this point is mostly baked in. Now, clearly, could we get more bad news in terms of weak June guidance like we talked about in our note? But I believe after comeback from Asia, what we're seeing, we have not seen builds get cut. And I think the important thing here is clearly iPhone units are weak in China, but there is relative strength in U.S. as well as Europe. I think at this point, New York City cab drivers bearish on Apple as a stock. The risk reward going into WWDC with the golden install base of Cupertino, $2.2 billion. We'd be buyers here, and that's why we're bullish.